Oh, okay. Too bad. Okay. Yesterday we're talking about on the left side. So the left side is amount including income. So the amount including your income is including T1, right? So yesterday we just go through one by one. Then the left side is the amount is not including income, is not including our T1. So that first thing is elementary, and the secondary school scholarship and bursary. So basically is elementary and the secondary school student is under 18. Under 18, so basically under 18, you don't need to do the tax return. You don't need to pay the tax on here. So that, but anyway, they just put there. So if the student gets scholarship or bursary, they are tax free, okay? You don't need to put T1. And GST credit received, everybody, you receive, if you net income, that the family net income is under some amount, so they will send you, government will send you GST credit. So this is not including your T1. Most gift inheritance. Yes, gift inheritance, that's I tell you. Like I just gave example is, I give example is, do you remember that for the babysitter, if you ask your friend to take care of your baby, then you have something to do. Then it's occasionally. It's not not frequently, or it's occasionally. So sometimes they won't pay. Sometimes they don't pay their money. They just give the gift. So if this gift, then the people, the person they receive that gift, they don't need pay the tax. Otherwise, if you give them money, give cash, then they possibly they need to pay that tax. Okay, that in law they need to pay because that's the cash. Okay, they need to pay the tax. They most time they just give the gift. So the gift, they don't need to pay the tax. They don't need including T1. Inheritance, yes, if the parents give that the money and give the house or something to their children, so the children, this one is not taxable. But my advice is like, I have an elder daughter, and if I give to her, like, if I give to her that the real estate, that house, of course, if for her is only a principal resident house, it's no problem. You just give to her. But if she has a second house, then this house is possible. It's got a rental property. So the best thing is don't be you just the parents will pay the tax, okay, and give to her in market price. Like me, if I give to her, I will give to her in market price, fair market price. Then I will pay the tax. I pay the tax, then she just when she got capital gain, then she pay tax in future. In this case, if you just give to her for free, then she will. If this one is rental property, she will pay the huge tax when she sell it. That's too much. So anything. So inheritance and gift gifts is free. Okay, it's tax free. You don't need including T1 if you receive it. So most payment of the type commonly referred to as strike paid. So the strike paid, the union, okay, they give some people they got they have they just put it's called the strike. It's called the people they just go to like they go to city hall building. They just put there on the road. They just put some post on there. So these paid is union paid them to do some parade or something to protest. So this payment is tax free. Don't need to pay tax. Okay, TFSA. Of course, TFSA is a tax-free saving account. So tax-free saving account income. That means you use tax-free saving account money to you put that GIC, or you purchase stock, then you make the money, right? If you put you use TFSA's money and put that money in GIC, then produce interest, or you use TFSA's money to purchase the stock, then you make capital gain. It's something like that. That's this one is tax free. The income from that is tax free. But if you're using checking account, then we just see there's investment income. So you need to pay the tax. Okay. So for the investment income, I'm going to talking about that. Okay. I think probably I just change in your class. It's a change for last week. Week 4. It's not. I'm usually for previous. I just discuss in week 3, but week 3 on week 4 I'm talking about the student return. I find out lots of students they just do the childcare expenses. They always they have confused for the final exam. So I decided to change, okay? Because I teach earlier, then you practice earlier. Then I can talking many times. So I want everybody is clear, not confused. Always now is some student they confuse. Okay, so anyway, so TFSA is very good the option. So when you use TFSA's money to do the investment, so all the investment income is tax free. That's Canada Child Benefit. Canada Child Benefit is you don't need including T1. Okay. Compensation paid by province and the territories to victims of criminal act and a motor vehicle accident. So you got something from vehicle accident, then that the compensation is not including T1. Okay, not including T1, and also that victim of a criminal, that's you got something compensation paid, so it's not including T1. Amount paid by Canada and the ADI, okay, for disability or death due to the war service. So this one is for Army. So the that's special for Army, okay, for the Army. So the Army is protect our country. So that if disabled, it's the disabled compensation and the death is not is tax-free. You don't need it including T1. And the same thing is RCMP. RCMP is pension and the compensation and for injury. The compensation for injury and the disability and death. So the RCMP is the same thing as Army soldier, right? So that the injury and the disabled and the death, the compensation is tax-free. But especially for RCMP, the pension, RCMP pension is tax-free. Most amount received from a life insurance policy, followed by somebody's death. Yeah. So life insurance, when you I know for some student you already know, right? So that there's some people from insurance company, they always tell you, you have to invest, you have to put money to get the life insurance, because life insurance, that money they pay, and when you get money from life insurance, it's tax free. You don't need to pay the, you don't need to pay the tax. Most of the lottery win. So that most lottery wins is in, keep in mind, is in Canada. It's not, you don't need to pay the tax. But for some country, I believe they pay the tax. For at least for in China. In China, the lottery wins you need to pay the tax on it. Okay, and also they just like for, if you get 1 million, they just subtract that tax. They just, you only can get not 1 million. You probably get 900 something. Okay, 900,000 something. So they already they deducted that tax at source. Okay, so the same thing, lottery win, you don't need to pay tax. And the same thing, the win from betting and the gambling, or just a simple recreation or enjoyment. So this win is not, okay? It's tax free. You don't need to include in your T1. So the same thing, that's the for lottery win. So I used to volunteer in casino. Okay, so somebody is very lucky. They do get they do win. I got, because I do cashier that time. That I saw that person, he wins 3,000 at night. They just give me that totem tote. Then I just give him money. Then he left. He left very early, before 12 o'clock, because my shift is 12 o'clock. My shift is I think that's 12 hours from 12 p.m. to 12 a.m. Okay, so afternoon from midnight. So it's voluntary. Okay, it's voluntary. What my daughter has has swimming club, so that's I just did volunteering in the casino. So that guy is he earning 3,000 that night, and so that 3,000 no need including your T1. Okay, so any questions for this one? These on the right side, so all the incomes you don't need to put on your T1. Is there anybody have a question? If you don't have a question, if you need, okay, if you need to take a picture or take screenshot, you are free to take screenshot.
Yes, ma'am, I took screenshots, even of you, ma'am.
Yeah, you can feel free to take screenshot. So this one we already go over that. Okay, I think I have another things. Another important thing is Okay. Another important things. So for yesterday, just hold on. Need to check. Why is not here? This the same thing. I'm not update for this one. So this one I want everybody take a picture for that. It's good for you. So file so that file return to request refund. If you have a refund, you're not you're not file return, so you have a 10 years. Okay, 10 years is 2000. Yeah, this one is from 2011 to now. It's only 10 years. So this year is 2021. So this one probably is 2012. I need change. So this I need update this one. So it's 2012. So the earliest one you can do is 2012, because now we are doing 2021 tax return now. So this one is 2022 and the 20. If you have a balance due, you balance own, that means there's no limit. Okay, CRA could ask you anytime. There's no limit because you own the tax. The request for adjustment to get a refund or reduce your in your tax payable, that's 10 years. That's still 10 years. Okay. Let me check. Let me change this one. Then it. This one is good. Request for payment 4 years. Okay. Now it's good now. So I update here. So this one is your request refund is 10 years. Okay, and the earliest year is 2012. If you have a balance owed, that means balance due, there's no limited. The CRA could ask you, but the longer one, you will pay the more tax. Okay, and more interest. Sorry, the longer one you will pay the interest. The interest probably is higher than your tax. The request for adjustment to get a refund or reduce your tax payable. The due adjustment is on 10 years. Okay, and to reduce your tax payable, that means if you need to pay your tax balance on. Okay, you balance on. There's only 10 years. Register for overpayment, EI. Yesterday we already go through that. Okay, EI only 3 years, and the CPP only 5 years. So the 4 years. Sorry, CPP only 4 years. So if you so this year is 2018, 19, 20, 21. So that you can do. If you have overpayment in 2016, 17, then you lost. Okay, then you lost. But when you do the electronic tax return, you never get that trouble. because the electronic tax return, like yesterday I showed you, they automatically go to, the system is calculated for you. You just I just show you is, this money is overpayment. And also, if you have 2 more T4s, that possible you have an overpayment. Okay, and if you do the paper return, so probably you lost that money. And now is on some people is, yeah, they did paper return. Yesterday I went to the bank yesterday afternoon. I went to the bank, HSBC bank. Then the lady is come to me. They ask me the question because she knows my and I know income tax very well. Then she asked me. Then I just surprised. So I will give her example. Okay, I will give her example next week. Is related to our tax return, but I just very surprised is she is do paper return, because she got a problem is when you do when you do electronic return, the system is automatically tell you, but she did the paper return. So she did the paper return, CRA come to her. Then she need finally she got problem. I help her, but I think she is not tell me all the information. She just tell me part of information. Then I think that solved, because this last summer, I think around July something. Then CRA is she get a letter from CRA. Then I help her. I think it's no problem. But yesterday, when I went to the bank, then she come to ask me, because she got a letter from CRA. Then she needs she need to pay 1,000. She need to pay 1,000 balance on. And also because in that regarding for income tax 2020 income tax, okay, 2020 income tax. I'm going to talk to you everybody. That's for some for most of people is confused, very confused that concept. So next week, okay, I then I already help her, but she is not she is not tell me full information. But if she's not talking to me, tell me all full information, if she do the electronic return, there won't be problem. But she's do paper return, so that's a problem. So now CRA asked her pay, because she got that time she got a refund 2,000, more than 2,000, 2,000 something. Now she need to pay back for 1,000 and plus interest. Then she tell me, I said pay, okay, you pay right away, you pay right away, so you get rid of that, and then the period ending, then the ending. Otherwise, the end list is not good for you. I tell her, then probably next time, because yesterday I went out running out of time. I need to pick up my daughter from school because I have peasants teacher interview. I can't be late. So so next time probably I'm going to introduce her for the studio tax. If you do the studio tax, sometimes like overpayment for EI, overpayment for CPP, if you do electronic return, you never lost this credit, you never lost this money, okay? But for a paper return, you possible lost this because you don't know is overpayment or not. Some people, if you're not good at it, okay. So the time limited for CRA to re-access a return for additional tax is 3 years. Okay, so this one is important. So in most cases, the CRA, they will reassess is 3 years. Okay, sometimes the for 3 years, but the if they find the problem, the lots of problem, they will ask you 6 years. Okay, that's the big problem. If the big problem, they will ask 6 years. So that's what we want. This what I said. I want you keep your record is 6 years. And also CIA says, okay, you keep your record is 6 years because we do electronic return. And also you do paper return. They don't need your send your original receipt. That receipt, you'll keep it. Okay, every year, you just use that photo. Like I show you that photo. This one is 2022. Then I also have something is here is